Today we're going to look at Tradingview and look at technical analysis as it relates to our investing and trading decisions, okay, in the cryptocurrency ecosystem. So when I first started to look into cryptocurrencies, when I was first exposed in 2017, I went to an event, and on a large screen, you're seeing what I'm seeing here. It was a Tradingview screen, lots of red and green and what have you, and I was absolutely confused. It looked like another language, and I had no idea what I was looking at. Over time, I've grown to absolutely love Tradingview and appreciate it. I use it almost every single day. I'm looking at Tradingview, and we're going to look at it across several of the cryptocurrency assets, and we're going to understand why this is so powerful for you to work in your repertoire as a trader and investor in the cryptocurrency markets. You know, I stress heavily on this channel here that if you're just throwing money into the market because someone told you to, or because you saw a coin pump on the top 10 or some news channel without doing fundamental analysis, which is researching the team you're investing in, researching the tokenomics, reading the white paper, reading some of the documents, starting off slow. Okay, if you're not doing the fundamental analysis, you're really gambling. It's like you're going to the casino. And I would also argue that if you're not doing technical analysis, which is what this video is about, where you're looking at the charts, the technical analysis here, this is what Tradingview really has to offer us. If you're not combining technical and fundamental analysis, you are throwing Hail Marys into your investments. Okay, so technical analysis is extremely powerful. It is a representation of everyone's play in the game across the entire ecosystem. So right here, we're looking at the Bitcoin chart, the Bitcoin USD, and this is literally the breathing nature of Bitcoin. This is the ebb and flow of Bitcoin, and we're going to kind of slow down and look at this because it could be extremely confusing for you. So right now we're at Bitcoin USD, okay, so it follows Bitcoin as it relates to the US dollar. And so right now, one Bitcoin is worth $29,809. And we're on the daily chart here, one day. So every single one of these candles, okay, that you're seeing here, which is red or green, like this candle right here, this candle right here is today. This was yesterday, the day before. Okay, so every single candle represents one day of price action right here. Okay, so I'll kind of zoom it in a little bit so you can see these candles. Okay, now if I were to come over here and click weekly, well, now every single candle here represents 1 week of time. Okay, so now instead of it being a daily, every single candle represents a week. All right, and it goes kind of further back in time. Now I actually use the free version. So Tradingview has a free version, so it's limited to the indicators. Actually, every single one of these arrows you see here is something that I actually put on this chart. When you go into a chart, it's just going to have these candles, these green and red candles, and then you can layer in certain indicators. So I can use these arrows. I could put on a few other indicators, which I'll show you. But if you want a lot of indicators and you want to use Tradingview at a different level, you can do the paid version. But this is another reason why I'm making this video, because I use the free version and it is extremely proficient enough for me as a massively serious trader. So you see, I've gone back through some time. This is when I started really doing this analysis back in 2018, okay? And at the very end of 2017, you could actually also go to the month and see how it just will, every single candle here now is represents a month. And these arrows here that I use, I really set them up for the daily chart. So when you bring it to the monthly, the arrows are going to kind of be jumbled up a little bit. but I'm just showing you, and we're going to go into other charts because I have several other ones. I have a couple other Bitcoin ones I use for different reasons. Okay, so I'm just showing you that there's a monthly, a daily, and a weekly, and those are the three charts that I use to analyze these assets. Okay, this is how I'm going to look back through history. Look at where might price action go towards. Right, so if I double click the screen here, see it says reset chart view, I'll click that and it brings you kind of to how they reset the chart, and you can always maneuver it however you wish. Okay, so here we are with Bitcoin. Why Bitcoin? Okay, when you look at my videos, I'm mostly talking about Cardano, and we will get to Cardano. Here is the Cardano chart here. Bitcoin, why Bitcoin? Because Bitcoin is the OG, okay? This is the pioneering leader of cryptocurrency assets. Bitcoin right now, here I have another, I'll open this up here. This is coinmarketcap.com. If we go into, just click the CoinMarketCap, we're going to see that Bitcoin is not the number one cryptocurrency right now, right? I actually think that in the future, there will be some of these other coins that will actually maybe surpass Bitcoin. You might see Bitcoin down here at 2, 3, or 4 in total market cap dominance in the future. But as it sits right now, I mean, by almost double, Bitcoin is leading the market. So, and it has been since day one. So until Bitcoin becomes surpassed by another ecosystem, another chain, it is an extremely reliable asset to follow and to watch, because what you tend to see through past markets, and we're going to go back to Tradingview, is that most of these other markets, these other assets in cryptocurrency market cap that we just saw down there, will follow the trend of Bitcoin. And actually, every other coin down below Bitcoin is called an altcoin, okay, an alternate to Bitcoin. So it's an altcoin. So all the altcoins tend to follow the trend of Bitcoin, okay? But there are rogue events, there are unicorn events that happen, there are moonshot events that happen in some of these other little projects or major projects below, some of these altcoin projects, but generally, okay, we're looking at generally here. Generally, the altcoins will follow the trends of Bitcoin, okay? And so if we go back to the weekly here again, and we kind of look at the weekly, let's just kind of check this out, right? Just kind of just look at this entirely a little bit. It's a weekly chart, and let's go to ADA. Okay, ADA. Look at that. If we go to ADA, it's similar, right? Not exact, but let's go back to Bitcoin there. See? It's kind of has the same structure, doesn't it? It's got this bull run market that we just kind of went through. And we are currently in the bottom of this last bear cycle, kind of transitioning, if you will. We might be transitioning up towards this new bullish cycle. And so Bitcoin and all the other tokens follow this trend, and you can verify that they follow the Bitcoin trend. Okay, and to actually get out of these arrows, we might come back to the arrows. I'll go to another chart that I have here. This is the BLX, the BraveNewCoin Liquid Index, and this is a fantastic, actually, this is something I set up way back also. I set this up way back. And let me kind of click here to, sometimes you can do logarithmic. Here is a logarithmic and auto. And we're going to click the logarithmic scale here, and I'm going to show you what I did. I actually put these green and these red shadows here to give you some perspective here. I think this might be interesting. And maybe let's go to the weekly so we can get, yeah, see this here? Look what I did here. This is Bitcoin, remember. And this the BraveNewCoin Liquid Index for Bitcoin, it actually goes back the furthest in history, okay? It goes back the furthest in history. And so this is what I set up so that I can get an understanding of where we are. And I'm going to kind of zoom in and out and all that, and we're going to look at this for a while. And what did I write here? I wrote BTC 4-year cycle. Bitcoin has 4-year cycles. The reason Bitcoin has 4-year cycles is because of their halving event. Now, written into the coded structure, the algorithm of Bitcoin, that is a mathematical structure, is a halving event. So Bitcoin is a proof of work protocol, okay, that relies on mining machines to validate transactions. And I actually have a mining machine, so I'll sit here and grab it and maybe show you on screen really fast and show you this. Okay, so here is a Bitcoin mining machine. I got this mining machine in 2017 and I never hooked it up. Okay, you need a special outlet. I actually got the electricians to come over to kind of put this thing in here because I was seeing whether or not I could mine Bitcoins and get more Bitcoins and participate in the Bitcoin network. And back then I was really investing primarily in Bitcoin entirely. Okay, so this is what a Bitcoin mining machine looks like. It's this like computer that you plug in and you get into this network, and then this computer will be going through randomized coded transactions and solving these puzzles to validate transactions on the network. So this is one Bitcoin miner. Okay, it's a proof of work protocol. So you plug this thing in, and it takes a lot of energy to actually power this thing, and expensive, and it puts a lot of burden onto the world. Okay, but every 4 years, okay, so if I would have started this in 2017, the last halving event, okay, that we went through was in 2020. So I was trying to plug this thing in 2017, begin to mine, and have 3 years of reward growth, okay, before the halving event. Now, why is it called a halving event? It's because after that halving event in 2020, the rewards that you would get as a miner get cut in half. Okay, so it's called the halving event. They get cut in half. So if I'm getting, let's just say 0.5 Bitcoin, which would be a whole heck of a lot. If I'm getting 0.5 Bitcoin, let's say a year for mining, okay, after a halving event, I'm going to get 0.25, right? Okay, so I'm going to put this thing down. It's actually pretty heavy, but this is one of these ASIC ant miners, and I kind of just have it to the side now. You can see the little ant miner S9 is probably a really old miner at this point, but I have it to the side in my room as almost like a a decorative piece of material in my room, just to kind of have like a picture or something on the wall, because it reminds me of that era. It reminds me of where I was at mentally in the beginning of my blockchain experience. Okay, so we're going to go back to Tradingview here. I'll just kind of drop that to the side. We'll go back to Tradingview and continue to discuss this halving event, right? So every 4 years, the mining rewards, okay, they get cut in half. So when you're looking at this right here, it's almost, let me see how accurate it is towards a 3 or 4 year span of time. So this would say Monday, it's November, it's November in 2011, okay, and then at the end of this green cycle here would be 15. So 11, 12, 13, 14, 15, right? This is a 4 year cycle, all right? 4 year cycle, and then it continues to go on. Okay, 17 there, and here we are in the midst of the last halving event. Okay, the trajectory of these cycles go in a 4 year rhythm. Okay, generally with a 3 year bull market, a 3 year bull market, followed by generally a year of of bearish sentiment. Okay, so we're going to try to just kind of wrap our minds around this. Way back here, when was this? This was in 2010. And go over here, and you can see, if I move the cursor over here, around this time, Bitcoin was at 6 cents, believe it or not. 6 cents. In 2010, if you were to invest in Bitcoin, you would probably not be working at your job right now, right? And from this point in time, Bitcoin in this bull run, okay, it goes from, and it started in like 2008, okay, so, but the data is only really picked up here in 2010, and again, BraveNewCoin Liquid Index has this data tracked this far back. Some of the other ones are, you know, more in like the 2012 or 2014 era, okay? So that's a little tip you can check out, and then just get on TradingView, sign up for the free account, and then search for that, and boom, it'll be in your indice. I actually even have this on my phone as a widget. So right in my phone on my screen, as soon as I open it up, I can see these prices. So it goes from 6 cents all the way up to $23, right? And then retraces all the way back down to $1. And then these are the bear and bull cycles of Bitcoin's history, okay? Then it drops all the way back down to that price of around, and we're just kind of going around. I'm going to go deep dives into the nitty gritties of this TradingView. I'm going to continue to make videos about TradingView until I feel like I've expressed fully the power of TradingView and the many multiple ways you could leverage this application here. It would take me probably 8 hours to do that, so I'll probably break it down to eight or so videos. It goes from $2 over there, and what year was this? It's always going to give me these ads in around 2011 mark, and then this was like the 2014 to 2013 era. It rises all the way up to $1,000, okay, and then back down to $200, and then it's all the way up to its $20,000 mark, okay. This is kind of the time where I got interested or exposed to Bitcoin. It was in this bull run here. Right around here is when I started to get exposed, and then it retraces all the way back down to that $3,000 mark, okay? And this was the last bull run that it went into, where it kind of crested this like mid $60,000 mark, went all the way back down to, right, like this 15 or even lower, and here we are, okay? Here we are in the current trend. And so I put these windows up here just for future projections, like I did these, all right? And here we are. So at the top of my box, and it's roughly around January 25, this could also be a different bull market that, see, every 16 years, something unique occurs within an asset's growth, where it could actually have a faster bull market, maybe right around the 2024 air mark here, okay? Maybe 18 months from today, it could crest up top and then go through an extended bear market, maybe like multiple years. Instead of this 1 year sort of trend, this 9 month to a year retracement, you could see Bitcoin having in a 3 year uprise. It could have like a 2 year uprise and like a 3 year or however long bear market, more of an extended bear market, okay? So I'm sort of watching out for that. So TradingView is where I go heavily, almost on a daily basis, especially because I have it on my phone to check what's going on. At the top of my box here, it's 260,000. That's how much one Bitcoin would be if it rose to the top of my box, okay? I could put this box down or bring it up higher or however. This is just kind of a rough estimation of what it will be like. And then of course, in this little window down here, it could drop all the way back down to like 57 or whatever. And I'll kind of move these around like I have these. as the market makes itself aware, okay, as it goes forward. So Bitcoin's 4-year cycle is something strong that we can rely on, like I said, actually until this bull cycle, because Bitcoin is moving towards its 16-year growth, okay? And after a 16-year path, an asset has a hefty amount of data. So when you're looking at this TradingView cycle here, when you're looking at these markets, this is what professional traders are looking at. And so when I see these candles, I see the crowd of people across the planet also are looking at this. And so if they're doing that, okay, then lots of these people who are professional traders are going to be making predictions and bets according to different price targets. This 4-year cycle that we can rely on gives us some boundaries, okay? It's not that it's absolutely secure, but it gives us some boundaries so that we can kind of try to gauge in a really difficult system, right? Like a volatile market like cryptocurrency, to give us some leverage in these volatile asset classes, okay? And so as it looks right now, where are we at? Okay, where are we at? And this is why I started to do these videos, although they're actually pretty challenging to do. So this is the chart without the logarithmic. The logarithmic sort of breaks it down differently. So you'll see when you get into TradingView, the maneuvering through the site will take some time. But we are in the early stages of this uprise, of this bull market. So for me, it's a great time to get a position. Okay, it's a great time to get positioned in this space because there's a whole heck of a lot of potential for your investment to flourish. Okay, it's not wise to get invested during this time. You know, if you would have began to invest in these markets around here in November 2021, you would have until December 22, over a year later, you're going to see all of that investment retrace and retreat all the way down. And there's another tool here that shows that will tell you how much that you actually lost. And maybe I'll go to my other site here. Okay, so we're here, we're checking it out. This is this November time span, and if you would have invested then, okay, it's a year later here, right? You can see it's November, December. Your portfolio would have lost, if you look at this red bar, if you look at this, you would have lost 75% of that investment. Right now, I mean, if you would have put $100 in here, you'd only have $25. You know, you put $1,000, you only have $250. And so, unfortunately, most people start to invest up here or over here. You could have invested up here, right? And then you would have seen this retreat happen. You would have been like really excited that this happened here, but then wow, agonizing. It would have been agonizing for you to go through this process of decline. And see, I think most people don't recognize cycles, and cryptocurrency assets are very cyclical at this point. Again, in the future, when full adoption comes and there's a lot more time and frankly capital in these markets, these cyclical nature of cryptocurrency assets will probably go to the wayside. But as of right now, it provides a fantastic opportunity to get our bearings. And you don't want to be this person who's invested over here during the top. And why do people invest at the top? Well, that's because when prices are at the top like this or rising up, and these candles are like going massively up in the upper direction, there's a tremendous amount of news that goes out. And there's something called FOMO, fear of missing out. So news cycles will go on and talk about it, and channels will talk about it. You'll get prompted on your social medias, and you'll say, oh my gosh, okay, and your relatives and your friends, and everybody's going to talk about it, and you're going to then take some money and get in here. But you're going to, what they call FOMO in. You don't want to miss out on this rise because you're thinking, well, maybe it's going to go up here to like 200,000 or 100,000 because everybody's saying this, right? They're saying, oh, it's at 60,000. It's going to go to 100,000 for sure. So you're like, I'll invest. But the timing of chart cycles, if you were understanding chart cycles, you would have understood that around here is this time when perhaps the markets will change. Okay? So it gives you some understanding. And so there's a lot of caution behind this. You see this? When people were going up, I remember this cycle tremendously. When it was going up towards $20,000, people were like, it's going to go to $100,000. But you have to keep in mind this chart cycle. Okay? You have to keep this in mind because these assets have a funny way of being cyclical in nature. Is it a great time to kind of get involved in thinking about putting $1 into this ecosystem? That's not my decision to make for you. It's your decision to make. This isn't not a financial advice channel. It's a channel about awareness and education. So we're at the very beginning of the restructuring of this market, in my opinion. And there might be some potential to go higher. And so you don't want to be that person caught here buying in when everybody's going to be buying in around here. Right now, people are there's nothing there. There's a lot of quiet talk about the market. You don't hear really much anything. If anything, it's a scam. It's nothing. It's like a bet. And when it gets to around here, you're going to see. Okay, and what is this, July 24? That's well over a year from now. It's like 16 months or whatever, right? So that's another thing. These markets are long term, okay? And I have a paid group. I have a private group. It's really not that much of an investment, honestly, if you're thinking about getting into these markets. But I do have a paid private group where I push out my real-time notifications to you in real time when I'm making a decision or making a move or something happens in the market, because it's very time sensitive, a lot of this stuff. And if you miss out on certain opportunities because of timing, then it could be a massive difference. So if you're interested in that, check out my website down there and look at it, right? It's an educational link where you'll be educated about a move that I'm making, something's happening in the market, some kind of participatory action that I'm going into, and my reasons behind it. Okay, so you don't have to sit here and analyze these charts and go through the work, the effort of having to do this. And over time, once you become versed in it, then in my hope, help you become more versed, and this will be more of a second nature process for you, like it has become for me. You know, I started out with mentors. I started out with experts in the field, and have graduated to understand my own style, and frankly, a lot of the other guys have fallen to the wayside a little bit, okay? Because they're not really expanding their education on the cyclical nature of these cycles. And in my next video, I'm gonna take you to a really excellent specific chart that goes into the depths of this, and it's a hidden gem. It's a hidden gem chart that we're gonna look at. Okay, so here we go with the Bitcoin as the leader, as something that you can follow. Now, why do I have all these green and red arrows? Okay, so we're gonna go back to the daily. This one is for the daily. Why do I have these green and red arrows? Well, I just said that there are 4-year cycles. Okay. And inside of the 4 years, you have years, like yearly cycles. And then inside of the yearly cycles, you're going to have 60-day cycles. Okay, so if I'm just going to use that measurement tool again from this arrow here. I'm going to click this arrow. We're going to move over here to this arrow. You see how that says 51 bars? So every bar represents 1 day. So 60-day cycles is a general cycle. It could be 50, it could be 48, it could be 65, but generally these 4-year cycles are broken down into these 60-day cycles of mini bull and bear markets, if you will, right? So there are many bull and bear markets that occur throughout this entire series, up on the way up and on the way down. Okay, so let's see this one. All right, I'm just going to try to show you something here. I'm not looking at the price volatility here. I'm just looking at, so this was 76 days, okay? So that's a little longer. Okay, generally, I said like 60 days. Actually, I can move this one probably to around here. And in my own time, I get extremely specific on these. So, but not crazy. Okay, right? 49 bars, again, 50 bars from that one to that one. 43 bars. Okay, so I'm not quite sold on this one yet. It could also retrace. All right, that's kind of why I leave this one here, my next one kind of off to the side, because who knows? I put it at 60 days away so that I can wrap my mind around. This is like 65 bars, so if it's 60 days was right here, that's kind of, I think, exactly where I had that. I probably had it, I always set them 60 days apart. Okay, because that's when I'm anticipating perhaps a drop. Okay, from low point to low point is the 60-day cycle, right? And at some point, it's going to have a high cycle, okay? And when you look back through time, it is extremely accurate. It's not like perfect, but it gives me more of an understanding of where market volatility might head towards. So I don't get nervous and flurried, and the opposite of FOMO is FUD, which is fear, uncertainty, and doubt. When prices drop like it did here, okay, here's another example. We just went through this. Bitcoin rose up to 24,000, 25,000. Let's kind of really get in there and just look at this, right? So it's from here. Like, let's say you would have put some money in here on January 1st. Look at that, January 1st, right? New Year's Day, you're like, all right, it would have been a good day to actually put some investment into Bitcoin or any crypto assets like ADA. We'll get into it. Okay, you would have put it here. There we go. Your portfolio would have grown 50%, right? And you're like, whoa, that's great. You're extremely happy. You might be even putting more money in. In 50 days, okay, from here, you grew 50%. And then what happens? What happens on this day is that then over the next, let's say, just kind of go here roughly. Again, we're just roughly. Over the next 20 days, you're going to watch that go down 17%. Probably more like 20%. Sometimes it doesn't allow you to go, let me see if I could do this again. Yeah, it's around 20%, okay? So it's around 20%. Your portfolio, you're watching it drop. You're like, wow, I just invested here. It went up 50%. Damn, and now 20% is evaporated like right out of thin air. And you're thinking, if you're following news and you're following articles and like you're following the FUD, everybody's going to tell you that Bitcoin's going to go to zero or there's no value or something else, and you're going to sell here, right? You're going to sell out at this very point because you're thinking, oh, I'm going to protect my growth, right? If I went 50% up and 20% down, well, I still have a 30% profit. So I'm going to try to protect this. And then what happens is you sit there, you feel like, oh God, I sold, I feel good. I feel really good. And then what happens is over the next 37 days or what have you, it grows another 50% from that point. But you are out of the game. You sold here. But if you understand these cycles, okay, if you understand these cycles, you can, it's not foolproof. There's no crystal ball. And I'm telling you, do not follow this as law, okay? There's no crystal ball here, but you can anticipate. You could almost begin to expect these drops. So you could have held, right? You could have held. If you would have held and not sold, well, you would be extremely like, oh my gosh, another 50%. So if you would have come down here, let's go back to, this time period, and you would have just held. Your portfolio's up 85%, right? 85%. And that's a whole lot better than buying here, coming up, riding the FOMO train, and then getting whipsawed out in this retracement. So these retracements are just a part of the growth of a bull cycle, right? They're just a healthy part. Like I have understood it as it's breathing. It's an inhale, it's an exhale, it's an inhale, it's an exhale. And these 30%, 40% drops always happen. They're gonna happen. And when they happen, it scares a lot of people out of the market. And that's what's called whipsawing. So then what happens to this guy over here, or this gal, they're gonna get back in. Like up here, they're gonna say, oh my gosh, I gotta get back in. And then they're in, and then it goes up, and they're like, great. And then it goes down again, and they get whipsawed out, okay? Because they really don't understand the 60-day nature of these markets. And that is something that back through since the beginning, okay? We're gonna kind of condense this chart down. We can look at back through time. So we're going back through. We're going back through time. And this was the really the capitulation. This was a COVID capitulation where it really dropped down to around the $3,000 era, and it was a very lucrative opportunity or advantageous opportunity to purchase to get into the cycle. So if we zoom in here, right, and we zoom out, you can see, right, like look at all this that happens. But when you zoom in and you're imagining that like today is right here, you have no idea what's about to happen in this market, right? And so these retracements, okay, these massive retracements that occur, like we'll look at this one here. So you're in, right? You're long. You're coming on in around here. It's not that you're timing this out. Best bet would be to get invested way back there, like where we just were, and then ride the game out for several years. Okay? So that goes in 43 days in a bull market, things can go extremely haywire up in upward direction. So in 43 days, your portfolio rises 137%. You're like, gosh, it's massive. If you would have put $1,000 in, you have $2,300 or whatever, right? But then, here we go. How much is this retracement? Down here. You're losing 30% or more, okay? 36, 30, around 30%. So these 30% retracements are always happening in the bull market. Here's another one, all right? Here's another one. They happen. But if you could just kind of stay the course, okay, through these 60-day cycles and not be shaken out, you might recognize that time will provide wisdom to you. So it's not that you could just rely on these 60-day cycles, right? Because we do go into bear markets. That's why I'm showing you, I'm trying to really put all this together for you and show you that, and I kind of bring this one into the weekly, okay, that at those very times, and where we just were in those markets is we were looking at, this was exactly that capitulation point where it was a bet to get in, it was a good opportunity to get in, and then here were these massive retracements, okay? And at the very time where you're riding the portfolio up, you can kind of get an understanding like, whoa, the cycle could be ending somewhere around here. So So I don't really want to back the truck up, as they say. Maybe I want to be more cautious, because we're getting close to the point where the market could change into this long-term, multiple month, more than a year or more of a bear market. Okay? You don't want to be sitting here waiting this entire time. And most people, what they do, they don't wait. They actually just sell, and they capitulate. They actually sell around these areas into the hands of smart money investors who are looking to accumulate and get their positions here so that they can then ride up this next cycle. Okay? So again, smart money investors, this is actually, in Wall Street, they call it smart money, and they call it dumb money. They call dumb money the guys and the gals who are entering here at the top. Smart money people are selling up here. This is where they're liquidating their position, taking the profit. And just to give you perspective, every time I get near one of these, I can't do the measurement tool. So let's just kind of go like right here. Okay. Put this in perspective, and it's not completely accurate, right? But if you were just to get in around this area, even lower, because it won't let me, but you get the point. 1,573%. And let's just say this is more like probably 1,700%. In 137 days, that's less than a school year. Your portfolio goes 1,500% up. Name an asset class in the world that can do that, that performs like that. You know, Tesla, Apple, any stock, gold, silver, uranium, nothing. And so could you have the awareness and the knowledge and the patience to just let it go and let it ride and not be fudded out into this whipsaw because of these cycles? Okay, so the best time to get into the position, in my opinion, if you got in right around here, that's great. Let's try to see if we could kind of use the measurement tool around here. Somewhere around here. Right? You still got 1,187% increase from this point. Right? Right? So maybe you didn't get in at the perfect time. Maybe you took advantage of this. So this is what I'm saying here, ladies and gentlemen. Right? And again, not financial advice. You're going to do your own market research and understanding. Right? Let's say we kind of got in, not quite at the top, but okay, so after that bar, what is this? Look at that. It's another 1,000% increase from there. We didn't really get it at the bottom, right? We kind of, after that massive bar that week, we're like, whoa, okay, maybe we get some position. And here we go with 1,000%. 1,000% increase, right? Now, it might not go up there, right? It might not be here. It could be here or wherever. But let's say you're kind of in around this time. If it hits the top bar, you got an 800% profit. Where in the heck can that happen? Let's say it only goes here, 300%. Well, I mean, 300% increase is pretty darn good. Now, it also could go up higher towards like 500,000, right? I mean, people were calling for $1 million Bitcoin last quarter or last bull run. So the point is that there is a lot of misinformation. There's a lot of distracted information that comes in and out of the news cycle for cryptocurrencies, more than I've ever really seen any other assets. And it's because it's a new emerging asset class. And so I hope that with this video, you recognize that there are two kind of cycles to be aware of when you're considering your journey in investing, okay? That there is a 4-year cycle, okay? And broken down in these 4-year cycles are these 60-day cycles. These 60-day cycles, where generally you have like a 45-day. So I'm always looking I'm always looking for around that kind of a mark where it's like on a bull cycle where we're going upwards. We're gonna look at it, okay? You generally have like 40 to 45 days of an upriser with like generally a 15-day decline, equaling a 60-day cycle. Because of this, it has saved me from being nervous and being whipsawed out of these markets over time. It gives me more clarity. It's not perfect. I'm not trying to time these markets and scalp these trades and be this day trader, right? I'm in it for the longer haul, and I don't want to live with anxiety when these massive moves happen. This was a massive move downwards for a long period of time, right? We looked at that one earlier, but I mean, for 20 whole days, you're just looking at nothing but negative, boom and negative. And if it wasn't for my understanding of this cycle structure, I'd be really upset, really nervous. Like I hear many of my friends. I mean, I get a lot of people, and actually people in my group that I give advice to and give educational feedback to, started off organically. I get a lot of people saying, what the heck's going on here? And I'm like, I'm reassuring them like, hey, do what you feel like you're comfortable with, and people do. No one's following me exactly what I'm doing, and that's not my intention. People make their own decisions, and I hope you make your own decisions, and I hope that this just gives you some education, some understanding, something that you can look at a little differently. Okay, and so very lastly, when we go to ADA, I just kind of started this. I haven't really kept up with this one because I extremely follow the Bitcoin one. But ADA's doing its own thing. It's following the ebb and flow of what Bitcoin went through, right? So it went through that bull market up there, kind of had that double like Bitcoin did, and then it retraced exactly like the Bitcoin markets did. And here it is again, restructuring itself into a bull market, okay? Join the weekly, and here we go, okay? And so I'm playing around with actually putting the numbers in there, and we'll see, okay? I'll continue to follow up with more and more analysis with TradingView and give you more video content as these markets go through these cycles so that we can see where these markets go. And for ADA's case, it's only been tracking here, and this is the Kraken. It's one of the furthest back that I could find towards this very end of 2017. Cardano started in the 2016 era, so this is the first bull market it went to, when it went to that $1.20 area, and then all the way back down to 2 cents. When we look at Bitcoin, you're going to see this exact aspect occur in its first cycle. Okay, when it goes to the dollar, back to 2 cents, up to $2, right? Back down to 30 cents, and then it went to 200, and down again, and then up to 1,000, and then down, and then up to 20,000. Okay, now Bitcoin has different tokenomics, but it is my view that Cardano will absolutely hit up this all-time high again of $3. Right now, it's at 40 cents. Okay, I think that it will surpass it. It tends to surpass the previous all-time high. So the previous all-time high here in the last bull cycle was $1.20. That's where it went to. So it was kind of straggling like this, and then it goes up to $1.20, comes all the way back down. And it was my view back here that Cardano would eclipse its previous all-time high, and it did that. It eclipsed the all-time high in 2021, and then it tends to surpass the all-time high, which it did, and then it moves all the way back down. So my view is that Cardano will come back towards its all-time high some point in the future, and perhaps eclipse it. But who knows? No one knows. There's also a chance that Cardano doesn't do that. So I'm not saying that you should hear that as absolute truth. Okay, and one more time, when we look at the BLX chart, when we go back, right? When you see these previous bull and bear cycles, right, from the very beginning, when Cardano was at these cents, this is exactly kind of what the Cardano chart looked like. It was down here at this 5 cent area. It went up a lot higher, but it had a bull market. Okay, Cardano really hasn't had a massive bull market yet. Let's just say that. And then it goes down, okay? And it crested down here, and then you could have made the assessment that it's going to go back and hit this previous all-time high, which it did. And then it tends to always exceed the all-time high and make what they call a new all-time high, okay? And then it has that retracement. And then you can perhaps speculate or anticipate that in the future, it will also come back here to crest that all-time high, which it did. And then what does it tend to do? Go above and make a new all-time high, okay? And so that is the ebb and flow, the structure. And then it retraces, and then you can make the assessment that it's going to crest and hit that $20,000 mark again, like it did. And then it went up and created a new all-time high. So can I make a educated decision that perhaps Bitcoin might go back to the $60,000 mark and touch that previous all-time high? I would say yes, in my opinion. And then can I also make an assessment that perhaps it will succeed in surpassing that all-time high and creating a new all-time high? In my opinion, I would say yes. Okay, so we're at the very beginning stage. We have some years ahead of us to see whether or not the market moves and see however the market moves, because you and I cannot control this market. The only thing that we can do is position ourselves to be available to leverage the movement of the market, and that's the name of the game, okay? It's not about trying to time the market. You're never going to time the market. But you can position yourself to be available, and by positioning, you can get set in the positions at the correct timing bands so that when the market does become available, you can actually leverage those positions. So that is Tradingview in a beginning style of video where we are looking at the power of Tradingview and what it can do for us as investors and speculators in the market, the cryptocurrency world, where it's often extremely confusing and there's a ton of information out there and there's a lot of FUD and FOMO and distractive commentary that brings you away from the reality and the cyclical nature of how these markets and how these assets move. Okay, so I hope that you found something of value here in this video about Tradingview. I encourage you to check out the Brave New Liquid Index, on BraveNewCoin Liquid Index on Tradingview there. Sign up for the free account. Check out the Bitcoin Kraken or the Bitcoin. There's several of them. You can rewind the video and see which ones I have. And I will promise that I'll put out some more videos as these 60-day cycles go forward, okay? So excited about the future. I hope you are too. And let's just keep our focus, okay? And keep our strength for the road ahead. It's going to be an up and down process, but we could surf that process. We could surf that environment with ease and with low stress, low anxiety, right? We're not FOMOing in. We're not taking a credit card, I hope. We're not taking a credit card out and trying to just put money in and throw a Hail Mary and pray that we're going to become successful, right? There's strategy and there is thought and there is planning and tactical approach to this that does not involve betting and casino royale type environment. Okay, so Derek on Chain here, sending you off. Hope you got some value and we will see you in the next video soon. Stay strong.